Blockchain isn't just about crypto anymore. What if the most disruptive financial technology of the century isn't Bitcoin, but the engine that powers it? Blockchain has quietly slipped from crypto buzzword into real-world markets, revolutionizing how assets are traded, verified, and secured. In this in-depth series, we explore the transformation happening right now, blockchain integration in global markets, and what it means for transparency, speed, cost, and control. Before we dive deep, make sure to subscribe for expert documentaries and explainers on the technologies shaping our financial future. Blockchain 101, Beyond the Buzzword. What is blockchain, and why is it different from traditional databases? Blockchain is a decentralized, tamper-proof ledger that records transactions transparently. Core features: decentralization, immutability, transparency. Decentralization. No single point of control. Public versus private blockchains in a market setting. Immutability. Records can't be altered retroactively. Transparency. Data is publicly verifiable on public chains. Types: public, e.g., Ethereum, versus private, e.g., Hyperledger used by banks. Market infrastructure. Where blockchain fits in the current financial system. Clearinghouses, custodians, intermediaries. How blockchain simplifies and automates these processes. Smart contracts and settlement layers describes traditional intermediaries, custodians, brokers, clearinghouses. Explains how blockchain disintermediates and automates processes like clearing and settlement. Custody auditing. Smart contracts can instantly process transactions with trustless logic. Tokenization. Digital assets on the rise. What it means to tokenize stocks, real estate, bonds. Real-world assets like real estate, equities, and art can be tokenized. Liquidity creation through fractional ownership. Secondary markets for tokenized assets. Benefits: liquidity via fractional ownership, 24/7 trading on digital marketplaces, lower entry barriers for small investors. Exchanges, custody and compliance. Blockchain native exchanges, DIX, versus traditional exchanges, hybrid models and regulatory integration, custody solutions, cold storage, MPC wallets, custodial services. Love learning how traditional and decentralized systems merge? Subscribe now for smarter finance content every week. Comparison of DEXs, decentralized exchanges, peer-to-peer, smart contract-based traditional exchanges, centralized regulated compliance features, KYC AML, built into platforms, custody solutions explained, cold storage for security, MPC wallets for multi-key control institutional custody, e.g., Coinbase custody. The role of smart contracts in market automation. How smart contracts automate settlement, margining, and risk examples in derivatives, lending and trading platforms, removing human error and reducing cost. Smart contracts reduce manual errors in settlements and reduce middlemen. Used in derivatives trading, lending, borrowing platforms, DeFi protocols, enable real-time risk management and execution. Institutional adoption. Who's building on blockchain? BlackRock, JPMorgan, Nasdaq, and their blockchain projects. Use cases in fund management, securities issuance, and FX collaborations with blockchain startups and consortia. Hyperledger, R3 Corda, Polygon. Major financial entities like BlackRock, JPMorgan, and Nasdaq are investing in blockchain R&D projects, include on-chain asset issuance, FX settlement solutions, blockchain-based trading platforms, collaborations with R3 Corda, Hyperledger, Polygon, and others. Central bank digital currencies and blockchain architecture, cross-border payment innovations, impact on commercial banks and monetary policy. Central banks, China, US, Europe, are developing CBDCs, central bank digital currencies. Blockchain enables faster cross-border payments, programmable monetary policy, better tracking and traceability, regulation, security, and compliance, blockchain and real-time compliance, KYC AML integrations, and privacy solutions. How regulators are adapting SEC CFTC MyCA FATF guidelines. Subscribe to stay informed as laws evolve with tech. Don't miss what's next. Regulators are beginning to accept and govern blockchain systems. SEC, CFTC, US, MyCA, EU, FATF, global, compliance is now built in. Real-time KYC, smart contract regulation, privacy layers, EDGE, ZK SNARKs. Blockchain for ESG and impact investing. Transparent tracking of carbon credits, supply chains, and sustainability KPIs. Impact investing via blockchain-based funds. Immutable audit trails and green certifications. ESG investments benefit from blockchain's auditability. Use cases: carbon credit tracking. Green energy sourcing, transparent supply chains. Creates trust in sustainability reporting. Interoperability and cross-chain finance. Importance of interoperability for market-wide adoption. Cross-chain bridges and protocols. Risks and innovations in integrating siloed ecosystems. Blockchain ecosystems are often siloed. Interoperability enables cross-chain liquidity, multi-chain DeFi products, better risk management technologies, bridges, e.g. Wormhole, protocols, e.g. Polkadot, Cosmos, the rise of on-chain analytics and data markets, blockchain as a source of real-time, transparent data use of oracles and Layer 2 solutions, monetization of market data through decentralized platforms. Blockchain equals open data. On-chain analytics used for market trends, risk scoring, trading signals. Oracles bring off-chain data on-chain, e.g. Chainlink. Monetization of data is possible via blockchain, e.g. Ocean Protocol. Blockchain in derivatives and complex financial products, synthetic assets and wrapped products, decentralized options, futures, and structured instruments, risk management via smart contracts, exploring how derivatives meet decentralization. Subscribe and don't miss our upcoming deep dives. Enables synthetic assets, e.g. tokenized Tesla shares, decentralized futures options, programmable payouts, e.g. insurance triggers, smart contracts, ensure collateralization, and automate settlements. Emerging markets, financial inclusion, and blockchain. Use of blockchain to build inclusive financial services. Examples in Latin America, Africa, Southeast Asia. Mobile-based microfinance and stablecoin adoption. Blockchain provides mobile-first finance in unbanked regions. Use cases: microloans via stablecoins, local remittances with crypto wallets, agricultural finance via smart contracts. Countries: Kenya, Brazil, Philippines, India, real-world blockchain pilots. And case studies: ASX's blockchain-based clearing system, World Bank blockchain bond issuances, IBM Food Trust for supply chain finance. Not just theory, real adoption, ASX, Australia, replacing its clearinghouse with blockchain. World Bank issues digital bonds on blockchain. IBM Food Trust tracks food supply chains for finance and sustainability challenges, criticisms and risks, scalability, and environmental concerns, cybersecurity threats, and smart contract bugs, adoption hurdles in conservative institutions, scalability, transaction speeds and costs still high on some chains, security, hacks, rug pulls, smart contract vulnerabilities, energy use, older proof-of-work systems draw criticism, regulatory uncertainty slows adoption in legacy institutions. The future: a blockchain-enabled marketplace, fully tokenized stock exchanges, real-time settlement, and programmable markets. How blockchain will reshape finance in the next 10 years. Subscribe now to follow the digital transformation of markets, one block at a time. Blockchain finance, transparent, instant, global vision, real-time, global, permissionless capital markets. Tokenized stocks, bonds, and real estate. Tradable 24/7 self-custodied finance for users and businesses. Blockchain could be as disruptive as the internet to finance.